Hello everyone. Today we are looking at our what a balance sheet is. But last week we discussed something that is called macro risk, and we discussed a lot of things regarding to macro risk. And but today we are looking at what is balance sheet. What is balance sheet? Balance sheet provides a picture of what a business owns and owes, as well as how much has been invested in it. So that's what a balance sheet is. It shows you everything that this business is currently owing social amount, and this business owns social amount, and social amount has been invested in this business. So balance sheet has a formula, and here's the formula: liability plus equity is equals to assets. So this is the formula. The formula has to be that liability plus equity has to be equals to asset, and liability is what the business owes. Equity is the amount of money investors have invested into the business. Meanwhile, asset is what the business owns. So asset have two types, and we have the current asset, we have the non-current asset. So example of current asset. The example of current asset are cash and cash equivalent. What are cash and cash equivalent? Cash and cash equivalents is in a line item on the balance sheet stating the amount of all the cash or other assets that the business have. So that is what a cash and cash equivalent is. So it's just an example of current asset. Another example of current asset is trade receivable and other receivables. So that's another example. Then we have investment invested into the company. So these are other examples again, and we have inventories. Inventories are what the company of the business have in stock. So let's say, for example, they have goods available, this and that. These are their inventories. These are what they have in stock. So that is an example of current assets, and then asset held for sale is another example of current asset. And note that this asset is being taken, this balance sheet is being taken within the range of a year. So you can get all the details by the range of a year. So let's look at examples of non-current assets, because I told you that we have current and non-current assets before. So now let's look at the example of non-current asset now. We have property, plant, and equipment. So all these things are non-current assets. So we have intangible assets. Then we have goodwill asset also. Time will not permit us to explain these things in details. So now we have talked about asset. Now I believe it's time we look at what liability is. And I told you liability is what the companies uh, uh, holds. So now we have current liability and non-current liability also. So we are going to look at the example of current liability. Example of current liability, we have the trade payables and other payables. So these are goods that the company is supposed to pay for. They are called trade payables or other payables. So these goods that you have not paid for but you will pay for in the future are part of your liability. Accrued expenses, the expenses you have accrued within some period of time, they is part accrued expenses. These are the expenses you have accrued within some period of time. This is an example of current liability. Then we have current tax liability, the tax and the rest, so they are still part of the liabilities. Then current portion of long-term debt. So maybe you borrow money for the business, it's a long-term debt. So these are parts of the current liability. And then other financial liabilities also. So we have liabilities held for sale. So there are some liabilities tend to sell. So those ones are part of the current liability. So let's look at what non-current example of non-current liabilities. We have loans payable. We have deferred tax liabilities. This happens based on some certain circumstances. Then we have other non-current liabilities also. So now I told you that the formula for asset is liability plus equity. So what is an equity? Equity, this is what investors invest and into the business. So let's look at equity is the net amount of funds invested in a business by its owner plus any retained earnings. So examples of equity, we have capital stock, additional paid in capital, we have retained earnings also. So now, apart from this balance sheet, there are other things which were included in this module. We have income statement also. So income statement is a financial statement showing its company revenue and expenses over a specific time period, letting us know how much money the company made or lost during this period. So that's what an income statement is. It shows the revenue and the expenses also. So that's what you supposed, that's everything you have to understand. I can't, time will not permit me to discuss other things, but I believe next week we might discuss more on other things. Thank you. Have a nice day. I remain Andrew Mamus.